There were three main developments in global equity markets in the December quarter. First was the U.S. election. Second was the U.S. Federal Reserve meeting in November. And lastly were political instability in Europe and fears of recession. So let's take each one by one. First and foremost, we had the U.S. election where President Trump won again. And what that unleashed was a very strong performance in the United States with companies levered to domestic consumption. The other thing we saw, obviously, were ripple effects of his agenda. Probably most importantly were tariffs, and that had ripple effects across emerging markets and also Europe. The second was, although we saw very strong performance in November, particularly in the U.S. Federal Reserve played the role of the Grinch in December when they had their meeting and talking about, not obviously they cut interest rates, but they really talked down future interest rate cuts. And that really put a kind of a spoil on the U.S. stock market in December. So we saw a pretty significant pullback. The last thing we saw from a country perspective was really political instability and fears of recession in Europe. And so Europe continued its descent, being one of the worst performing regions in global equity markets. In calendar year 2024, we really saw India being the standout to the upside. A very strong performance in India, followed by the US and Canada. And so there really was some pretty strong divergences in returns by country. From a sector perspective, it was really financials and information technology and really everything else. So financials and technology were by far the leaders, where we saw pretty negative performance across every other sector and industry. The performance of the fund in the December quarter was pretty strong, both in absolute and in a relative sense. So in an absolute sense, the December quarter in Australian dollar terms was up a little over 11%, beating the index by 258 basis points. Similarly, in 2024 was a very strong year for the fund in both absolute terms again and relative terms. The fund was up 29.69%. To be exact, beating the index by 10.73 percentage points. So very strong December quarter and very strong calendar year 2024. Our performance was further boosted by our positionings relative to industries during the quarter, particularly in overweight to technology, and also our positioning relative to currency. Now that was basically due to our exposure to US dollar, or more of our companies on a relative weight had exposure to US denominated sales, and that helped during the quarter. That was offset a little bit by our positioning relative to countries, most importantly our overweight to India, which detracted slightly from returns. But overall, a very strong quarter driven by exactly what we want and expect it to be, and that's informed momentum. From an attribution perspective in calendar year 2024, our outperformance was driven by the most part due to informed momentum. That's the exposure of momentum plus stock selection. So taking one step further into that, it was really the holdings in US, India, and Korea that contributed most. That was offset by a little bit of a negative exposure to value, which is kind of our persistent underweight, which actually did well in calendar year 2024. In terms of new trends that we are seeing, the US is still exhibiting very strong momentum, in fact, accelerating a little bit as we enter 2025. On the other side, we're seeing India lose momentum quite substantially. And so we're seeing our portfolio move to areas of strength and away from weakness. And right now, from a country perspective, the US is the area where we're seeing the strongest momentum. So from a sector perspective, where we're finding the strongest trends currently as we enter 2025 is really in industrials, technology, and energy. In industrials, what we're seeing is very strong trends in aerospace and defense. And within aerospace and defense, we're seeing strong opportunities, strong trends in space exploration, particularly in the United States. So companies we own in the fund include Rocket Labs and Redwire. And we're certainly seeing a lot more interest in space exploration in the US as Trump has made it one of his goals to send an astronaut to Mars. Further in industrials, obviously, we're seeing continued strength and momentum in everything AI, particularly in infrastructure and construction, building out of data centers, utilities. So companies like a Sterling Construction in the US has been very strong. In technology, we're seeing new trends, still driven by AI, but different flavors of AI. Whereas before we saw only really momentum in the enabler, so networking, communication equipment, things of that nature. We're seeing it broaden out a little bit into more of the harnessers of AI, so more software-driven opportunities like a Pega Systems in the US. Having said that, though, we're still seeing very strong trends in everything that's levered to the build out of data centers, whether it be networking or electrical equipment. So that still maintains very strong momentum, but new trend we're seeing in software. The other area you're seeing very strong trends currently, really new trends, is in energy. And particularly within energy, companies levered to natural gas, either exploration and services, as we're seeing more the market really come to the realization that natural gas will be the near and medium term source for the utility companies to really power the AI workload. So we're seeing very strong new trends and companies leverage to either natural gas equipment or exploration. So companies that we own in the fund levered to that theme would be DT Midstream and Archrock, both in the United States.